Hello, Bruce Herta here today with your SBA lending tip from Members Choice Credit Union. Today we're going to talk about skin in the game. And the example that I'm going to use is a recent borrower who used an SBA loan to purchase a business. This business was a child daycare facility, and they used 3 different forms of qualifying equity to qualify for their SBA financing, and that's what we'll talk about. So you may ask, why this title, Skin in the Game? What does that mean? When we qualify an SBA loan for approval, we're always looking at a ratio of the owner's investment to how much money that we're going to invest in that business with an SBA loan. And there will be industry guidelines and other lending standards that we use to make sure that there's a healthy ratio between how much the business owner has put of his own money into the business and how much we as the lender are going to put into the business with an SBA loan. There are 3 different forms of investment that will qualify when we're looking at SBA financing. The first and the most common is referred to as the down payment, and that's a dollar investment. When we look at the business's balance sheet, there's going to be a section with all the debts in it, and that's where our SBA loan is going to show up, along with other loans that the business has. And then there's going to be an equity section, and that's going to show the owner's investment. In the case of our child daycare facility, they owned a rent house, and so they were able to pledge a second lien on that property and give us additional collateral on the loan. This is not an asset that showed up on their business balance sheet in equity, but it was additional protection for the lender and something that we did consider additional investment by the borrower into the transaction. A third form of investment is that the seller is allowed to carry a second lien note. So in this case, we had a buyer of this child daycare facility that would have been required to have something like 20% equity. We were able to get them in with only 10% of their own money down and a little bit of extra collateral that they pledged with that home, but we had another 10% in financing provided by the seller. That seller took a second lien. They agreed to treat it like capital and not take payments until the SBA loans paid off. We were happy with the seller for participating in the transaction because we knew that that would facilitate the transition in ownership by them still having some skin in the game, and it was a happy transaction for all involved. So now you're prepared for your SBA lender's inquiry about what forms of skin in the game you have for your transaction. Happy hunting, and I hope you find the best SBA loan or conventional loan for your financing needs. If you have a question, call me anytime. Bruce Herta here, signing out.